Good morning, students. So we are now onwards going to meet at this new timing, which is a very fresh timing, especially for a subject where you have a lot of deliberation, you have a lot of legal discussion. It is very important that we catch up at a time where your mind is totally free of all the daily chaos. So I'm sure this new timing will be adding more value to our discussions, to our understandings. And since we'll be having a start of the day in such a fashion, I'm sure the entire day would be even more fruitful, right? So, with this, let us move on to the discussion part. So, students, we had dealt with chapter 1. Chapter 1 was dealing with the taxable event, which is supply. Now, before I proceed, I would first like to take up your queries. Anything that you found while you are studying, something which is challenging, something which you found that you haven't understood, or it was something where you felt that some discussion or some inputs from your side is possible. So let me first take up that point of discussion with you, and then we will proceed to go to the second chapter, which is the base of creating a levy of GST. So, students, anybody first would like to add up some comments, some inputs? Any questions? Yes, people present there. I'm sure you all had good night's sleep. So now you should be more charged up, and I'm sure all are ready with your all concepts, queries. Yes, Swaminathan is asking, sir, please explain again composite and mix supply. See, Swaminathan, in brief, I'll tell you. So basically, whenever there are two or more supplies which are actually different means they are of different items. They may be all goods, they may be all services, or they may be some goods, some services. When this type of a combination is there, then the question comes, if all this is provided in one transaction, like you go to watch movie, over there the movie ticket includes samosas, it includes popcorn, it includes hot beverage, and let us say it also includes, for the sake of just making an example, the travel of bringing you to the theater and taking you back. See, you don't know how in future business models would change. Now, with so many things changing, like in case of this entertainment industry, people have started coming less to the theaters because they have so much content on the OTT. So let us say to lure the people to theaters, the theater owners decide to start making such type of a package. That is for 1,000 rupees, they will provide you all these different things. Now, when they provide you everything in one transaction, then the question comes in perspective of GST, all these are different. They are having different tax implications in terms of valuation, in terms of tax rate, in terms of exemption, time of supply, place of supply. Then the question is how to treat such transactions. That is where, Swaminathan, the concept of composite and mixed supply would come. And in that, I had added that you have to see whether it is composite, whether it is mixed, or whether it is still independent. When you say it is still independent, it means you will tax each one of them separately and you will not go for the treatment suggested in section 8 for composite and mixed. But if it is not independent, then it would be composite and mixed. And then if it is composite, then out of all these, you will take that particular supply for taxing, which is the principal supply out of this, but then you should fit into the conditions of composite supply. If you fit into the conditions of being a composite supply, then the tax treatment of this entire transaction, entire value would be as if it is the supply of the principal item. If it is a mixed supply, the same transaction would be taxed by taking the tax rate of that particular supply, which is having the highest rate out of all. So this is how you do the treatment. And if it is neither composite nor mixed, then in independent supply category, you will treat each one of them as if they were supplied separately, and the tax treatment of each one of them would follow. So Swaminathan, this is in short the treatment of composite and mix. Now with respect to this, if you feel that some point is not understood, any particular example, clarification is not clear, you may put it across, we can have a discussion.
Okay, sir. Thank you for that. In study material question, one of the study material question, when the composite supply is given, actually, two items is there. Then transportation also is given along with that. Where the transportation is specifically exempted, when they are supplying that, they are charging for that as well. Even
Correct,
the exempted
correct,
also they are charging. That is what I
correct.
am. What is the reason behind it?
So that is what we discussed, na Swaminathan. See, if this whole transaction is to be treated as composite because it fits into the definition of composite, then how is the law crafted? The law says that in that case, we will treat this entire transaction as one, firstly. So it is treated as one. It means on the entire value, we will apply the rate as applicable to that item of supply, which is the principal supply. Now I'll take a reverse case, Swaminathan. So if a reverse case I have to take, where this is the example of getting treated in the hospital, where you are taking treatment, and along with that, you are given the accommodation in the hospital room. In the hospital room, you are given the facility of using their clothes and other items. We'll let us call it as nursing. Then you are also provided meals by the hospital, and even the medicines are given. But all this is coming to you as one bill. Now, one bill does not mean that the value is given lump sum. The value is given as a breakup in the bill. No doubt with that. Each line item is given separately. But since you fit into the definition of composite supply for this transaction, they say that we will consider all these line items, all these transactions as one transaction. So on the entire value, entire hospital bill, we will take the tax treatment of the principal supply. Now, interestingly, Swaminathan, in this case, exactly reverse is happening. All other items are taxable items. But because you are treating it as a composite supply, as per Section 8, the treatment is to be given of the principal item, which is the main hospitality, sorry, not hospitality, the healthcare service. And since it is healthcare which is exempt, the entire transaction and the entire value becomes exempt. So it will happen either ways. Either like in your example, some exempt item may get taxed, or in my example, entire items which may be taxable may get exempt. So now in this, what is the challenge, Swaminathan? So you have both side examples. So what is the challenge? That is what I want to know. Why is this a challenge, Swaminathan?
No, no. See, now I am clear, sir. See, I was a doubt under the inverse that the exempted sale is there. Why they are including the exempted sales also in the composite sale on the taxable criteria? They
Because
are charging
the
us,
treatment,
yeah.
because the treatment is, that is what is Section 8 saying, that you will tax the entire transaction firstly as one, taking the entire value, and on the entire value you have to apply only one rate because we are treating it as one supply. This is what is the crux. Right, Swaminathan?
Right, sir. I got it. Thank you.
Yeah. Yes, students. Anybody else? Students, anybody else? Any questions? Any specific query, doubt you want me to address?
As you advised, sir, I solved all the 14 questions provided in the supply of service, supply. So in one of this question, I have doubt. That's what I asked you. Thank you, sir.
Perfect, perfect. My pleasure, Beta. Yes. Anybody else, students? No? So I will proceed with our today's topic. Now, I'll just rub out this as it is not relevant to this topic. Now, if you remember our first class where we started with the topic of supply, I had given some background where I started with this same point of levy. And I said that for creating levy, firstly, you require the power. The power is given by the Constitution, and the power to levy GST has come through the new Article 246A. And there are more amendments to other articles 269, 270, etc. Now, the levy firstly means creating the charge of that tax on some person or on some transaction. Now, this levy or to create a levy, the requirements are there should be a taxable event, then there has to be a taxable object, and then other conditions may be provided. So, who would be the person on whom the tax would be levied? What could be the value on which the tax could be levied? What would be the rate at which the tax would be levied? So all these are required to create a levy. Now, when we talk about the GST law, all these things are what is provided in our section which creates levy. That is section 9 for CS, section 5 for I, and section 7 for UTGST. So these are the sections that create a levy, and you can say majority these sections are mutatis mutandis, except that in case of I, you have some additional part regarding this. Now, what is the taxable event in case of GST? We all know it is supply, which we understood in detail. What is the taxable object? It can be either goods, it can be either service, or it can be the combination of two. Let us call it as both, because everywhere you will find this goods, service, or both. Then, who is the answer is the person, and then the value and the rate, right? Achha, again, I want interaction. Again, I want discussion. So it should not be that you're only hearing me out. You should be taking up your uh, keep your minds open when I'm explaining something. Whatever you have already read in this chapter and come, if your queries are ready, you can put across those queries as we reach that point. In fact, even if you want, you can put across the queries at the start so that when I will be reaching the point, the relevant point, I will myself link your query to that particular point, right? So now, in this chapter, we will try to understand all these things in detail. Supply has already been done. So today we will understand the other aspects, good service, about person, about value, about rate, etc. Now, interestingly, when we talk about all these things, what is also of interest is to understand the section 1. Now, we all know section 1 of any taxation law deals with three things: title, commencement, and scope. See, understand the structure. So what it talks about, firstly, title. So all these acts in the first line in section 1, the first subsection of all acts will say this act shall be called as, and then it will say the Income Tax Act, like here it will say the Central Goods and Service Tax Act, and so on. Then it will talk about the commencement. So it will say the act shall come into force on. So for Income Tax Act, it will say 1st April 1962. For GST law, they are saying on the date to be notified, which then was notified as 1st of July 2017. So that is what is the date from which the law, the taxation will become applicable. And then the scope. Now, the scope part is what is my interest in discussing in this particular section, because other two things are pretty straightforward. When we talk about scope, scope means what? Because as we proceed in this subject also, when we are studying, plus as you will see this law unfolding, this law developing, you'll find that in future this question will come up in courts, and there would be some very pertinent issues that would be taken up for resolution in courts. Now, what is this scope all about? Generally, this scope is about the geographical area. See, one scope is about what transactions would be covered, that section 9, section 5 will elaborate. But in section 1, what they talk about scope is generally the geographical area to which that particular law applies. Now, I'll substitute this with another word, that is the political boundary. Now, this is very important because whenever you read a taxation law, it is important to understand that nowadays taxation have not remained confined to one place, one city, one state, one country. Why? I'll tell you. Because of the advent of technology, because of increase of so much of online content in the form of videos, in the form of OTT web series, in the form of music, it is very difficult to confine the transaction, confine the persons who are engaging into that transaction geographically. So YouTube channel is not of India. Google is not of India. Majority of all these OTT platforms, Netflix and all, are not from India. But today, an Indian or a person who is residing in India is continuously consuming this data day in, day out extensively. Now, when this is happening, so it is, in simple words, a cross-border transaction where one person is outside India, the another person is inside India, and this is where the entire challenge comes. So even though the scope which you'll find is more of a physical or a geographical boundary, but it will have implications, and that is why I substituted this with political boundary. Now, firstly, if I read the law bare, what it says, this act shall extend to whole of India. Originally, this said except Jammu and Kashmir, because on 1st July, Jammu and Kashmir, still having the special status at that time, was not had not given extent to this. However, by 8th of July, we got the extent, and hence the GST law also became applicable to Jammu and Kashmir from 8th of July. So presently it is whole of India. Now anyways, after the abrogation of Article 370 and 35A, now anyways, this will never be a question whether the act applies to Jammu and Kashmir or not. Now, it is interesting to now understand when they say the act applies to India, what exactly India would encompass. Whether India would mean the territorial boundaries of India, whether India would mean something else, and what would be this territorial boundary. So first thing that it says that India means the territorial boundary of India as per Article 1 of the Constitution. So this gives you the physical boundary of India, which is defined by our constitution as this is India. Fine. Now, interesting part is India is not only the land portion. Then the second part of India, or the definition of India, covers the second aspect of our boundaries, which is the sea portion. So it says that India will also cover, will also include the territorial waters. Now, I'm sure you all know what is a territorial water. Beyond our landmass in the sea, 12 nautical miles is still our boundary. So, beyond the baseline, it is called as the baseline. into sea. 12 nautical miles is still our territory, our territorial boundary. So that is also India. So when I say territorial boundary, it means I am talking about 12 nautical miles from the baseline into the sea. And then they say not only the waters, even the seabed, that is the lower part of the sea, where let us say you touch some ground, that seabed, and also the subsoil which is underlying such waters. Then they say India will also include continental shelf, exclusive economic zone, or any other maritime zones. Now, all these are defined in a special act called as the Territorial Water Continental Shelf Exclusive Economic Zone and Maritime Zone Act. Now, what are these all areas? Like you'd be knowing that with special permission, we are allowed to explore oil somewhere in the Bombay High area. So, somewhere here, we are allowed to explore oil up to 200 nautical miles. And in fact, now I'm getting to here somewhere down, we have got some reservoirs relating to, I think, rare earth or something we have found. Or even I think not rare earth, I think oil is only found, and that is now in such huge quantity that maybe if we are able to extract it, we will not be dependent on any other country for our oil requirements. So, for such explorations, there is international law which requires us to make some application, and on the basis of that permission, we get the exclusive rights to carry out some economic activity in that area, which is the economic zone. Presently, it is 200 nautical miles on the Bombay High side. So, this is how we get the specific permission. And then comes the most important part. Even in the air, the territory of India will extend to the airspace. Which airspace? Above the landmass and also above the territorial waters. It is very important to note here, it will be only up to 12 nautical miles, not that 200 nautical miles which we discussed above. So the airspace will not extend up to 200 nautical miles. The airspace would be limited up to 12 nautical miles into the sea, which is our territorial waters or territorial boundary. So see, this is a pictorial representation of what is given there. So somewhere the landmass where it is getting completed is decided as your baseline. Beyond that, 12 nautical miles is our territorial boundary. And then we have all these things. This is what is the seabed. These are the subsoil. So they are the land portion lying beneath the water, which is called as seabed or subsoil. And as I said, up to 200 nautical miles, you have this exclusive economic zone. Now, interestingly, there is one more point which is not given in the definition because it is not required here. That is this point of 24 nautical miles. Now, there is a concept called as custom waters. Like how we saw territorial waters, there is a concept called as custom waters. So, when we study the customs law, you get that definition that one, there is territorial boundary, territorial waters, which is 12 nautical miles, and then you have further 12 nautical miles beyond your territorial waters. So it is total 24 nautical miles, which is called as the custom waters. Now, what is this custom waters? Custom Act is one such act which is encompassing many functions. One is the levy of tax on import export, but along with that, a major function is security. A major function is surveillance. A major function is ensuring that something which is not good, not correct for the country should not enter or exit the country. So, for all these safety related purposes, the Customs Act extend beyond your territorial boundaries. So it is extending beyond 12 nautical miles up to 24 nautical miles, but only for some specific actions. That is why up to 24 nautical miles we use this word, that is also waters, but which waters? Custom waters, where you are not allowed any specific taxation rights, but you are allowed only some security related rights. And that is what is over here called as the contiguous zone. So the gap between 12 and 24 is termed as the contiguous zone. And then beyond this 200 nautical miles, whatever is the sea portion is we call as the international waters where nobody has any rights. So it is also called as the high seas. Fine, students. So I hope this basic understanding of these all concepts related to our territory is clear. Now, when we are talking about this exclusive economic zone, this is what is of interest to me, because when we are talking about taxation, taxation will trigger only when there is some economic activity. Now we are allowed to carry out some economic activity here in the 200 nautical miles area, but that is not part of your political boundary. However, because of this definition, since our definition of India for the purpose of this tax includes, in fact, it is the same definition even in income tax also, but just to tell you, in this case, we are including exclusive economic zone in our definition of India for the purpose of tax. Hence, even though politically this part is not India, still for the purpose of one, economic activity, and two, taxation, your tax would extend up to this point. So that is how we have to understand the implication of the scope of this taxation. Correct? Then comes the state GST law. When you read the state GST law, it says that it will extend to whole of that particular state's boundary. So when you read, let us say Maharashtra SGST, it will says it extends to whole of the state of Maharashtra. So this is how the territory is given in case of state GST laws. IGST law will say again it extends to whole of India. UTGST law will say it extends to the union territories of all the specific names as per section 1 of the UTGST Act. Now here that clarification is given that erstwhile state of Jammu and Kashmir is reorganized into Union Territory of Jammu and Kashmir. We all know this. After the abrogation, when reorganization was done, Jammu and Kashmir was broken up into two parts. One is the Union Territory of Jammu and Kashmir with a parliament, and the other part was Union Territory of Ladakh, which is without a parliament. And this was done by the Jammu and Kashmir Reorganization Act post the abrogation. Further, the erstwhile union territories of Dadra Nagar Haveli Daman Diu is merged into a new union territory of Dadra Nagar Haveli Daman Diu. Why does this act? So these are just for your understandings. Yes, Swaminathan.
Sir, why the Pondicherry, Jammu and Kashmir is not included the Union Territory definition?
I'm coming to that. I'm coming to that. Now, in fact, one more thing is not there. Delhi. Is Delhi a state or a union territory?
Yeah, it's a Union Territory, sir. Delhi is a Union Territory.
So why it is also not included? So we are talking about Jammu and Kashmir and I think Pondicherry. Why you did not ask for Delhi, which is even a bigger state and in fact having more economic activities than the other two?
Sir, I forgot, sir.
Okay. See, that is where this point is of relevance. You'll find this word Union Territory, Jammu Kashmir with legislature. Union Territory of Ladakh, but nothing is given with legislature, right? Now, this is what is the point where I wanted to bring out the difference. That point is when you read the definition of state. I was just looking for that. I don't know whether it is given above. So, when you read the definition of state, not given. Okay. So, importantly, those union territories, I repeat, those union territories which are having legislature, that is, those union territories are having their own parliament, there would be elections, some chief minister would be elected. That will not be included in union territory. That will now be called as state for the purpose of taxation. So, this is what is the point. They have given 2 stars. Is there any clarification relating?
Sir, which means they are independent state in the
Sort
purview
of.
of law.
Correct.
Which
That is the
means,
point. So for them, in short, there will be a separate state SGST Act. So like you have the Delhi State GST Act. So all these union territories which are having legislature, since they're having legislature, the finances would be managed by that particular legislature, and hence it will not be considered as part of union territory, because the moment it is union territory, you know it comes under center then. But where it is having a legislature, it has to be having their own separate finances, own entire finance department. So they will be considered as state. That is what is the clarification for your query, right?
Right, sir. For these union territories, they are controlled by central government, so they are collecting the all the charges, right, sir?
Yeah, so means it is being administered by central government. So then the revenue also is of the central government in a way, correct? Whereas when a union territory is having legislature like Delhi, like Jammu and Kashmir, so we recently had the elections in Jammu and Kashmir. So to that particular specific legislature, and they would be managing the finances. It would not come to the center. That is the difference between with legislature and without legislature, correct?
Okay.
Is this fine with all? Everybody? Any questions with others, students? You may unmute, you may put it in chat, but let us have a proper discussion so that you understand everything that is there in the law, because these are the points which are going to get converted into case studies at your final level. So I'm trying to take up all those issues for discussion on which you can expect case study questions at your final level. So anybody else having any specific query, doubt? Okay, great.
Sir, I have one question on this. See, this is a union territory. Only the IGST is applicable, or UGST is also is applicable, sir?
See, when you are a union territory, it is C plus U. So half
Okay.
is central tax, half is union territory tax, union territory GST. Like how in case of state, you have C plus S. In case of union territories, you have C plus U. And then for interstate transactions, there is I. So it is
Okay.
not that
That,
union territory will only have I. Union territory will also have C plus U, because that bifurcation is has to be retained, that whether this transaction is within the state, that is intrastate, or this transaction is with other state, that is interstate.
sir, one more clarity on the Delhi. Say example on the Delhi and the Pondicherry, Jammu and Kashmir. Is the U plus C or S plus C, sir?
S plus C. That is what is the point. I explained. Now, these are now not considered as union territories for taxes. They are considered as states. So wherever
Oh,
union territory is having legislature, you will be considering them as states. So this definition is missed for some reason here. So if you go and check the definition of state, this will be clarified. So the law itself says state will include.
oh, okay. I got it now, sir.
Perfect.
Yes, sir, perfect.
Great. Any further questions, students? I want others also to speak up. Let me hear y'all. Let me get queries from y'all. Yes. Others, no
Presently, no
queries?
questions. Yes, sir.
Okay, excellent. Perfect, Rohit. Now, now we go to analyzing the definition, so not definition, the levy section in detail. But before that, keep this in mind that for levy, any law should have these things: the event, the object, then on whom this levy is, that is, who is the person liable to pay, the value, the rate, because these things will make up levy. Now, let me just inform you, there is a very landmark decision of Govind Saran Ganga Saran. This is an old decision of VAT laws, but this has spoken and decided on the concept of that to create levy, what are the requirements? If those requirements are not met, the levy itself would fail. And when I say levy would fail, then on that transaction, the tax cannot survive. So this is where you have to just remember that relating to levy as to whether tax can be levied or not, as I gave you different components, these are coming out from a very famous decision, then which became basis for other decisions also on same lines, that is Govind Saran Ganga Saran. Now, we first start discussing the levy section of CGST and of SGST Acts, and then we will go to the IGST Act. Now, for C and S, you refer section 9, and for IGST, you refer section 5. Let me first start with section 9, which is applicable to C also and S also. What is the difference between the language of C and S? I'll explain. So we call it as that the section is mutatis mutandis. So whatever we are reading in C, the section same section 9 is mutatis mutandis in S. Mutatis mutandis means same with necessary changes. What are those necessary changes? I'll just highlight. So parallelly, it will also get covered. Section 9 of S will also get covered. Now, there are 5 subsections. One, two, three, four. Where is the fifth one? Fifth one may be covered separately. So there are total 5 subsections. Now, what are these 5 subsections dealing with? So, first is subsection 2 of CSI, even U. Subsection 2 says, for the time being, something will remain outside GST. Now, interestingly, if you see Constitution, where the GST has been defined, the Constitution in its definition of GST says that GST will be a tax which will be levied on supply except on alcoholic liquor for human consumption. So in short, alcoholic liquor for human consumption is outside GST and it is kept outside by the Constitution itself. So we will say constitutionally, liquor will be outside GST. Now, why constitutionally liquor will be outside GST? Because liquor or any toxicating items are always the state subject. That is why you'll find that there is liquor ban in some states. You'll find that there is tobacco ban in some states. So all these toxicating items, liquor for human consumption, tobacco, narcotic drugs, these all are a state subject. What do you mean by state subject? State has the exclusive power given by Schedule 7 of the Constitution to handle these type of activities, transactions. So it is not only about taxes, it is also about how to handle these transactions. Like, as I just mentioned, some states have banned this. So that is all the prerogative of the state. Hence, the definition of GST in Constitution specifically excluded alcoholic liquor from the levy of GST. Now, interestingly, you will say then, sir, what about drugs? What about tobacco? Interestingly, Constitution definition of GST has not excluded drugs, not excluded narcotics from the definition of GST. Why? You will get to know very soon as we proceed, but just keep this at the back of the mind. They have excluded only one intoxicating item, that is alcoholic liquor. Now, second very interesting point is we all know that there is no GST on petroleum products. But let me tell you that Constitution has not kept the petroleum product outside GST. In fact, as per Constitution, other than alcoholic liquor, everything is under GST. However, the charging section of the GST law itself has deferred the taxes on supply of these petroleum products, 5 petroleum products. It has deferred, saying that the levy will be with effect from some future date, and that date will be notified by the government as per the council recommendations. So, constitutionally, petroleum products, entire petroleum is within GST. However, out of entire petroleum products, only 5 products, that is a crude petrol, which generally we are importing majority, then the petrol or diesel that we refine and make in our petroleum companies, that is refineries. So you have the diesel, you have the petrol, you have the natural gas, and you have the fuel which is required in the planes, which is called as aviation turbine fuel. These are those 5 petroleum products which are kept outside GST. Interestingly, LPG is not in this list. It means LPG is fully under GST because it is also a petroleum product, liquefied petroleum gas. Only natural gas is what is outside GST. And this is of importance that to note that these petroleum products are kept outside GST by the GST law itself. So constitutionally, Constitution has permitted, given permission that you can levy GST on petroleum products. So Constitution has not barred that, like in case of liquor. But for the time being, until unless all states reach a consensus in the council, they have agreed at the start of GST law that for some time we'll keep it outside. Once the GST law settles, once the states are getting their desired revenues and everything is as per the state's requirement and it is matching their policies, then they will agree to merge. Now, if GST is not on these two items for the time being. One is alcoholic liquor for human consumption, and second is these five petroleum products. So then the question comes is, are there no taxes on this? Answer is no. That is why you will observe that the earlier excise law, the earlier VAT laws are not completely removed. They are still in existence. So we still have the VAT laws, we still have the excise laws, but in a reduced form. But what is this reduced form? That is only limited to covering these items. So for alcoholic liquor, you have the earlier laws applicable. For petroleum products, you have the earlier laws applicable. And as we proceed for tobacco and all, what is the situation? You'll get to know as we proceed to those points, right? So this is of importance to be kept in mind that when we say GST is not applicable, it is not completely outside taxes. You have to pay taxes, but the taxes would be as per the old laws. Fine, students? Now, this is subsection 2. Now then, what is subsection 1, 3, 4, and 5? Subsection 1, 3, 4, and 5, which is creating levy, the difference between these subsections is subsection 3 and 4 says that the levy which we are creating, the tax would be payable under RCM. And when we say under RCM, the full form is reverse charge mechanism. It means we are saying that the tax would be payable by the recipient of the supply. This is what 3 and 5 is saying. And when later we'll study subsection 5, which is not here, so I'm just writing here, it says that in respect of some notified supplies, and presently only services are covered, goods are not covered. So with respect to notified supplies of services, the tax would be payable by the e-commerce operator. E-commerce operator in simple words is the app. So what is the difference between 1, 3, 4, 5? So 1 is the parent subsection creating the levy, but 3, 4, 5 has shifted the burden of paying tax. This is very important. It has not shifted the levy. It has only shifted the responsibility of paying tax from supplier to some other person. So let me read subsection 3 and 4 first. Whenever 5 will come, we'll read that and then we'll go to the parent section. So what does subsection 3 says? The government may, on recommendation of council. So up till here, it is all the common phraseology. So we can ignore this. By notification, that is also fine. So what does subsection 3 says? That for some specific category of supply, it may be of goods, it may be services, the tax will be paid under the reverse charge mechanism. And when we say it will be paid under the reverse charge mechanism, we are talking about the recipient. So the tax is payable by the recipient of a particular supply. And then it further says, this part for me is more important, that all the provisions of this act shall apply to such recipient as if he is the person liable to pay the tax. Now, interestingly, students, when we will read subsection 5, you will find something similar. It will say that in respect of some notified supply of services, the tax shall be paid by the ECU. right? Like how here they are saying it will be paid by the recipient, over there they are saying it is paid by the ECO. But the difference is when we read 3 and 4, you will find that it is saying that it is paid by the recipient. But interesting point is what it says that all the provisions, like here also I'm marking, all the provisions of this act shall apply as if this recipient is the person who is liable for paying the tax. Now, what I'm trying to highlight is when we will read subsection 5, the difference in language will be they will say that the ECO will be deemed to be the supplier of those services. Now, this is the interesting point of differentiation. Being at final level, we have to now decode this difference. So, when you read 3 and 5, where the tax payment responsibility is shifted to recipient, and we read subsection 5 where the tax payment responsibility is shifted to ECO. What is the difference? The difference is not only the responsibility of tax is shifted, but main difference between 3, 4 and 5 is the treatment. In 3, 4, the recipient will not be treated as the supplier. The only thing is that the recipient is made liable for paying the tax, and the act would apply to him as if he is the person who is only liable to pay the tax. The act will not apply to the recipient as if he is the supplier of the goods or service. But when you read subsection 5, it will say that the act will apply to ECO for those notified supply of services as if ECO is the supplier. Now you'll say, sir, what is such a big difference? Many things will change. A simple example I'll tell you. If I'm saying that you become supplier, then tax liability is anyways on you, but all compliances in the law, including time of supply, including filing of returns, including doing registration and everything will apply to you from the supplier's perspective. But when I'm not saying that, I'm simply saying that, like in 3 and 4, that you will be treated only as the person liable to pay tax, and the act will apply to you only to this limited extent. Then the act is not treating you as supplier. So all the compliances which the act requires the supplier to do are not made applicable to you automatically. For you, the compliances would be given specifically, and if any compliance is not given to you, you are outside that compliance. So this is a very big difference between 3, 4 and 5. Right? Now, within 3 and 4, both are under RC. Now, what is the difference? So, 3 and 4, I'll tell you what is the original difference when the law came. When the law had come, that is in July 2017, 4 covered all unregistered purchases. That is where the supplier was unregistered. And 3 covered only specific purchases. So the difference between 3 and 4 was 3 covered specific purchases or specific, I'll say, inward supplies, and 4 covered all unregistered purchases, that is, all purchases, all inward supplies where your supplier was unregistered. Now, this continues as it is. Here, there is a change. Now, all unregistered purchases are not covered in 4. 4 says again, specific unregistered purchases are covered. So, the law has limited the applicability of subsection 4. The difference between 3 and 4 is 4 will trigger only when your supplier is unregistered. 3 may trigger in both cases where your supplier may be registered, where your supplier may be unregistered. So that doesn't bother 3. So 3 is giving its own specific list, which we are going to study in the later part of this chapter, where for those lists, reverse charge will apply irrespective of whether your supplier is registered or unregistered. But 4 will again apply to a specific transaction only. So there is again a list for subsection 4, but there this precondition is there that the supplier should be unregistered. So I'll just read. Swaminathan, can you please read subsection 4 for me?
Sir, yes, sir. The government may on the recommendation of the council by notification, specify a class of registered person who shall, in respect of supply of specified categories of goods or services or both received from an unregistered suppliers, pay the tax on reverse charge basis as the recipient of supply of goods or services or both, and all the provision of this act shall apply to such recipient as if he is the person liable for paying the tax in relation to such supply of goods or services or both.
So what is the specific requirement of 4, which is missing in 3, is it says that firstly, you are some specific category of registered person. So obviously the buyer is registered. Secondly, the transaction is also some specific category of goods service transaction. So the transaction is also specific. And then the third requirement is that the supplier is unregistered. So three things together will make up the subsection 4 RCM. Whereas you will find that none of these three is covered in subsection 3. Here nothing is mentioned about that your buyer should be registered. Nothing is mentioned about that your supplier should be unregistered. The only thing is that obviously this list is also specific. So they will specify for which categories of inward supplies subsection 3 will apply. So only to this extent, both these are same. Sorry, there is some background. Kindly switch off your mics. Okay. So the only common thing is that both are applicable to some specific categories of transactions. But the difference is here, supplier is unregistered and recipient is registered, whereas there is no such requirement in subsection 3. Now, moving on to section 5 of IGST. Now, section 5 of IGST is slightly different from CNS. First, one more thing I missed out, subsection 1, which is the main section. So, subsection 1, which is the main section, charging section in section 9. Swaminathan, please read for me.
Sir, subsection 1 of section 9 of CCHI, subject to the provision of subsection 2, there shall be levied a tax called the Central Goods and Service Tax on all intrastate supplies of goods and services or both, except on the supply of alcoholic liquor for human consumption, on the value determined under section 15 and as such rate not exceeding 20%, as may be notified by the central government on the recommendation of the council and collected in such manner as may be prescribed and shall be paid by the taxable person.
Okay, so first, this subsection 1 is subject to subsection 2 because subsection 2 overrides subsection 1 and subsection 2 has kept petroleum outside. That is how subsection 1 is subordinate to subsection 2. So when we are reading subsection 1, we should read except alcoholic liquor. Now, sorry, not alcoholic liquor, except petroleum products. Then second thing, which is outside GST, is obviously alcoholic liquor for human consumption because that is done by the parliament itself. And a very recent amendment is that now they have also kept undenatured extra neutral alcohol. It is called as ENA for short. Extra neutral alcohol or the rectified spirit, which is used in industry. So this is the industrial spirit. This is not for human consumption, but this is used for the manufacture of liquor for human consumption. So you can say the raw liquor, which is the very strong, the alcohol content is there. From that, they make the liquor, which is for human consumption. So where that raw liquor is also sold by someone to these alcohol industries, that raw liquor will also be outside GST. There was a lot of litigation going on, but before the court gave the judgment, the council themselves decided to keep this outside the GST law. Again, keeping it outside the GST law means it is having the domain of the states only. That is what the litigation was. But before the honorable courts gave the judgment, the Council has itself removed this from the levy of GST. Now, as I mentioned, 5 things are required for creating the levy. So first is the taxable event. So here they are covering the taxable event of intrastate supply, then the taxable object, that is good, service, or both, then the value for which they say you have to refer section 15, then the rates for which they say that will be notified, but it cannot exceed 20%. So 20% C, 20% X. So the maximum power given to the parliament is to levy 40% maximum. However, till date, this 40% is not used by the parliament. They are only using 28%. But the rate will be notified, and that is why we have the rate notification in the form of notification 1 for goods and notification 11 for services, where the rates are prescribed. And the fifth component is who is the person liable to pay tax. It is payable by the taxable person. So by default, you can say it is the supplier here. And then 3, 4 covers the recipient and 5 covers the e-commerce operator. Now, when you read the CGST and the SGST Act, the only difference is this. In case of SGST Act, you will read here state goods and service tax. Remaining everything would be similar to this. That is the only difference between the C and the S. Now, what is of more interest to me is subsection 1 of the IGST. Before that, I take you to subsection 2, 3, 4. They are replica of 2, 3, 4 of the CGST Act. So again, 2 is for those 5 petroleum products which will be kept outside GST, and they will be kept outside up to a date notified. From that end onwards, they will be brought into the GST. Subsection 3 and 4 both deals with the RCM, same conditions, that for some specific categories of supply, the tax would be payable under the reverse charge mechanism. The tax would be paid by the recipient, and the provisions of this act shall apply as if the recipient is only the person liable to pay tax, not the supplier. Same thing over here, replica of 9.4 is 5.4, that in some specific class of registered person, so here the same first condition, recipient should be registered. Second, the supplies are also specific, but the supplier should be unregistered. So same components are there. There is no difference between 9.2, 9.3, 9.4 and 5.2, 5.3, 5.4. For the only difference is that is applicable for intrastate transaction C plus S. This is applicable for interstate transaction, that is I. Correct?
Yes, sir. Here on the subsection 1, they are talking about 40%.
No,
They are only
because over there it is half. Na? C and S will be giving, C is saying 20, S is saying 20. So here it will be 40. Because IGST is combination of C plus S. Na? Correct? Na?
Yes, sir.
No confusion with this. Na? Swaminathan.
Yes, sir. Clear, sir.
Okay. So can you help reading subsection 1 for me?
Yes, sir. I will read out.
Please.
Yeah. Subsection 1. Subject to the provision of subsection 2, there shall be levied a tax called the integrated goods and service tax on all interstate supplies of goods or services or both, except on the supply of alcoholic liquor for human consumption on the value determined under section 15 of the Central Goods and Service Tax Act, and at such rate not exceeding 40% as may be notified by the government on the recommendation of the council and collected in such a manner as may be prescribed and shall be paid by the taxable person.
So if you compare this with 9.1, it is virtually the same, for only difference of that here, this is now saying we will levy IGST, that is integrated goods and service tax, and it will be levied on the interstate supply. Barring this, it is a replica of C and S. What is of very special importance for me is this proviso. Now, this proviso is carved out only in relation to import of goods, and that is what is an interesting point of discussion that we are going to take forward. But before that, the entire levy section 9 of C and S are replica with only one difference. Wherever central word is used in S, it will be the state GST. And when you compare 9 with 5 of IGST, again 1, 2, 3, 4, 5 are replica with necessary changes. So they are mutatis mutandis. Only major difference between both the levy sections of CGST SGST compared with IGST is this paragraph. And this paragraph is only dealing with one thing, that is import of goods. Now, first we will read the paragraph and then I'll try to bring out what is so special about this paragraph, why it had to be carved out. Yes, Swaminathan, can you please read for me?
Yeah, provided that the integrated tax on goods other than the goods as may be notified by the central government on the recommendations of the council imported into India shall be levied and collected in accordance with the provisions of section 3 of the Custom Tariff Act 1975 on the value as determined under the said act at the point when duties of the customs are levied on the said goods under section 12 of the Customs Act 1962.
Very important. So let me first keep this bold part aside for the timing. I'll explain that separately. So if you keep the bold part aside, what basically this proviso says that whatever you are reading in subsection 1, that has a very big exception. It says that the IGST on goods imported into India, that is, as I said, for import of goods, the most interesting part is they are saying that the levy of IGST, the collection of IGST will be now as per section 3 of the Customs Tariff Act. Now in customs, you will study Customs Act, which is the main parent law, and you have a separate Customs Tariff Act, which is covering the taxes, tax rates, you can say, or the different taxes of import duty, export duty, etc. Now, in GST law, we have only one law, that is the parent law, which we are studying CSI. There is no tariff act in GST because the tariff is given in the notification, which we studied. The rates are given in the notification. But when you go to the excise law and the customs law, there is a parent law for the entire act and there is a separate law for the tariff. Tariff means the rates of taxes. So even excise had the Central Excise Tariff Act and customs also have the Customs Tariff Act. So for rates, there is a separate act, but for remaining everything, you have the parent law. Now, what is interesting for us to note is that with respect to the IGST, which is applicable on imported goods, they are not saying it is not applicable. They are saying that levy collection will be determined by or will be as per section 3 of the Customs Tariff Act. And what is even interesting is that the valuation will also be done by the said act and also the time of supply will also be as per the Customs Act. So for imported goods, levy, collection, valuation, and even the time of supply. All these four things will be as per the customs law and not as per the GST law. This is a very interesting point. So what they are trying to say is, now for this, when you study the Customs Act in detail, which is part of our syllabus, you will find that in case of customs, wherever goods enter India, so let us say this is our boundary. So whenever goods enter India, the customs liability triggers and it will be payable when the goods are actually cleared. So there are two markings. One is, let us say this is our territorial boundary, political boundary of India, that is a 12 nautical miles boundary. So customs law says that once the goods enter this 12 nautical miles boundary, which is our political boundary, the customs liability triggers. But it will be payable only when you clear the goods from the customs, so which will be at a later date. Means even the IGST will trigger here. That is what is the meaning of this point. So when we are saying that the customs law will be applicable for levy, means what? That the IGST component on an imported goods will trigger at the time when the customs duty, that is the import duty, will trigger. So the levy will happen at the same time. Similarly, the manner of collection for this IGST will be same like Customs law. So what is same? In customs law, the importer is required to pay the tax. So even IGST on imported goods will be collected from the importer. Now this appears to be something like reverse charge mechanism where the recipient is required to pay tax. But what is very important to notice, it is not covered in subsection 3.4. So when we study the RCM list, this case of import of goods is not covered in RCM list. So it is technically not RCM. But practically, since the collection of import duty on such goods is done at the time when the customs duty is collected, so practically also the collection is done from the recipient who is the importer. But you have to understand it is not called as an RCM transaction. Most interesting part is valuation. Valuation in customs law, when you study that, you will find that it is very different from what valuation we are going to study, or maybe you all have studied at the inter in the GST law. So interestingly, when we will be valuing our domestic goods for the purpose of levying the GST, it may be C, S, or even I, the value of the goods would be different. The manner of calculating the value is different. And when some imported goods are valued, again for levying the IGST, the valuation will be lot different because for IGST on imported goods, the valuation will also be as per the customs law and not as per the GST law. Importantly, rate is not mentioned in this proviso. So the rate of your IGST on imported goods will not be decided by the custom laws. Rate will be decided by you only. So whatever is your rate on domestic goods, the same rate will apply when the goods are imported into India. So rate is not shifted to customs law, valuation is shifted, and even the timing, which we call as time of supply. So they are saying that when it will be collected, again the timing will be as per the customs law and not as per the time of supply provisions of the GST law. So in GST law, we determine when to collect tax, which is called as time of supply, but that will not apply for imported goods. Is this clear to all? Students, is this clear?
Yes, sir.
Perfect. So
Again, this provision applies only for goods, right? Not for services.
yeah, because customs law do not apply to service. That is the main point. See, this is shifting everything to the customs law, but for that, customs law should be applicable. So customs law applies only in case of import export of goods. Custom law is anyways not covering import export of service. So by default, that is not being covered over here. Fine.
Okay, sir. Understood. Thank you.
Perfect. So now, out of our total 15 minutes break allotted, right now we'll just have a 5 minutes break. It will be a psychological break also. And for me, there is some physical break. So we'll just have a break right now, 5 minutes. The balance break will cover after some time. Fine? Yes, Neha, I'll answer you after the break. So 5 minutes break, students. Sir, if Customs Act apply, then why mention in GST? So, Neha, the answer is actually it is a GST. That is, it is a goods and service tax. Only the administrative part is shifted to customs. Please understand this. The levy or the tax always remains GST only. But let me tell you one more thing, that even before GST, what were the taxes applicable? Excise, VAT, all these taxes which are applicable on goods were also levied by the customs law, collected by the customs law. So, in the same fashion, right, like now what you are reading for the IGST on imported goods, the excise and the VAT on imported goods was also levied and collected by the customs. So the tax is of GST only. Only the procedural part, when to levy, how to collect, from whom to collect, all this has been shifted to customs for obvious reason that it is easy. Why easy? Because entire import will be passing through customs. So everything the customs are doing, they are checking for the authenticity, whether the goods are originating from the correct country, whether there is any type of smuggling, whether any such goods are trying to be brought into India, which is prohibited, etc. So all checks are done by customs. So they are also the person appointed for collecting customs duty, and hence parallelly, they are even given the authority to collect the GST and the earlier excise and VAT. So the point is that for the purpose of uniformity and mainly for the purpose of ease of the administration part, it has been given to customs. Neha. Now we come to this, yeah. Now we come to this bold part, that once we concluded that for imported goods, for levy collection valuation, you have to go to the customs law. There is an exception to this. One type of imported goods is not falling in this proviso. So the effect of this bold part is that this one item is going back to 5-1 for levy collection, everything. And what is this? It is saying other than the goods which are notified. Now, what is notified today is online money gaming. So, online money gaming, which we studied, that this is part of actionable claims, rather specified actionable claims. And once it is specified actionable claim, it becomes goods. So, for the purpose of taxation law, this online money gaming, in short, whatever games we are playing by putting money at stake, money as bet, that is what is online money gaming. These online money games are put in the category of specified actionable claims, and hence they are treated as goods. But even though they are treated as goods, the point is that they will be, understand this, they will be not crossing through the customs because they are in online form. They will never come through the customs route. You are playing the games from your laptop, from your mobile phone of any foreign online gaming company. So no involvement of customs is there. Hence, they have very thoughtfully excluded the application of customs law for this one import of goods, which is online money gaming. So online money gaming entirely will be regulated by regular 5-1. Other imported goods which are physically coming through the custom boundaries and through the customs barrier they are crossing and they are entering India, that will still remain in the proviso. I hope this part is clear to all. Yes, Swaminathan.
Sir, for curiosity, I'm asking one question.
Please, curiosity is appreciated. Please tell me.
Say, sir, that excess is separate, custom is separate, and GST is separate.
Right.
The thing is that now the import, all the imported is we are routing through the customs, except online money gaming. The thing is that is it the extra burden for the customs? Is there anything we are extra paying to the customs in related to from the
Collection and all.
GST? Collection and all. Is there any? I mean, I wanted to know the logic behind. Even though it is a government
Logic
activity,
behind what? Logic behind what?
see, they are working extra for the GST.
Are they?
Collect.
Because anyway, see, I already mentioned they will be doing thorough checking of all the consignment of goods, the baggages, everything that is enter India for their purposes. In fact, their checking is more detailed, more thorough. Many times they take samples and send it for some forensic where they are doubtful about what exactly is the content of the goods. Because I mentioned already, see, customs law, firstly, understand and appreciate everyone. Customs law is not for collecting tax. Custom law is like your security guard standing at the borders of India in order to ensure that whatever persons or goods or any document or anything which is sensitive, I'm using the word sensitive, so it will even include prohibited, even include restricted, everything which should either not enter India or should either not go outside India, everything is taken care of by customs. So I repeat, customs law, even though we look at customs law as a taxation law, but it is not only limited to customs or customs duty. Its role is even to ensure the restriction, prohibition of certain goods entering India, certain even persons, because the same responsibility will be given to customs. Because, anyways, they are standing there physically, anyways, they are thoroughly checking everyone. So, if I give them this added responsibility, ki boss, collect the customs duty, collect the excise duty, collect the GST, there is no additional burden for them. They have to simply add one more line item in the document, that like how they are collecting so many other taxes. Acha, let me tell you, they are not only collecting customs, they are collecting so many other taxes, cesses, whatever is applicable. In fact, they are also regulating different types of schemes, because for import export there are different schemes. So again, that is what is handled by the customs. So for them, adding one more small item of GST makes no difference to them. There is no burden on customs. Correct? Swaminathan.
Okay, sir.
Yeah.
Customs are our security in
Yes.
other ways.
Yes. That is our first firewall, I'll say. Like how you have firewalls for your computers. So whenever anything from outside is coming to your computer, to your system, there is a firewall which first scrutinizes and then it allows only the relevant things and blocks whatever it's suspicious. Same firewall is our customs. Now, with respect to 9.3 and 5.3, we have a specific RCM list. Now, RCM list is in two parts. One is RCM on goods and the other is RCM on services. Now, this RCM on goods is covered in notification number 4 bar 2017. Now, we are dealing with the list of the integrated tax. So, it is ITR. So IT is integrated tax, R is the rate. I'm sure you all would be knowing notifications are of two types. One are called as rate notifications and other are general. So for general, they will not write R. They will simply write notification number and IT if it is for integrated tax, CT if it is for central tax, and ST if it is for state tax. They will not write R. Now, what is the difference between rate notification and a general notification? Wherever the notification deals with something which you are studying in levy, that will come in rate. Where it is dealing with all other things like the procedural part, compliance part, that will come in general. Now, these are some supplies of goods which are put in the RCM category. So whenever these transactions are happening, the tax liability will be discharged by the recipient. The supplier don't has to collect the tax and pay to the government. It is the recipient who will be paying it directly. So let us say I am supplying these goods to you. Normally what happens when I'm collecting the price of the goods, I will add up the GST and I'll collect the GST from you and I'll deposit the GST to the government. However, in respect of these supplies, I will not be collecting any GST from you. I will be only collecting the price of my goods. And after this transaction is over, you will deposit to the government the tax which is applicable on these goods in the form of GST. It may be C plus S if it is a domestic transaction, it may be I if it is a interstate transaction. Now, what are the goods? What are the requirements? Let us understand. So, majorly, if I have to give you a short form, short remembering point, you will find that majorly this list is relating to agricultural products. Not all. Huh? If it would have been all, they would have given only one entry. There are different entries because I don't want to cover all. So I will write all and I will cancel so that you'll remember it is not for all agricultural goods. But if you see majorly it is agricultural goods or it is goods supplied by government. So where government is the supplier, they want to keep government out of the hassles of all procedural compliances. So in many places where the government is the supplier, they have shifted the burden to RCM so that even though the government is supplier, it need not get into the compliance part. So broadly in this list also, you majorly find two types of things being covered. One, some agricultural products, and two, where the supplier is government. Now, you have to just keep the names in mind, cashew nuts, whether with or without the shells, that is without the outer covering, and whether with or without the skin. Now, generally, when cashew nuts we are consuming in house, it is pure white, but the original cashew nut has one skin over it, which is slightly brownish or muddish, and then there is a shell outside which makes it look like a fruit, right? So that is a hard shell. So cashew nut may be with the shell or without the shell, right? Sorry. Here for RCM, it should be with the cell, with the shell, and even with the skin. Obviously, if shell is not removed, the skin cannot be removed. So the requirement is it should not be shelled or peeled. It means the cashew nut in the very raw form. That is how it is plucked from the tree. Now, supplier is the agriculturist and recipient is the registered buyer. So basically, these are those, you can say the agents and all, not agents because they are acting as their own business, but in the general parlance, we call them as agents because a farmer never goes in the market. So generally, farmer sells it to these persons who then further sells it to different main businesses across India. Same is with BD wrapper, that is the leaf which is used for making BDs. Same thing, agriculturist and buyer is the registered person. Same is with tobacco leaves from which finally tobacco is made. Again, agriculturist and registered person. Then you have some oils, and then they have excluded what will not be covered other than those of citrus fruits, right? And then they have given the list. Now, where again supplier is unregistered and the buyer is registered. So these are the list of certain oils. Again, an agricultural produce, that is the silk thread, which is called as the yarn. We all have studied, or you may have even practically seen the sericulture, where the silkworm is used. The silkworm makes the thread, and then that thread is taken, and then it is sold in the market. So who is the supplier? Supplier is any person who manufactures the silk yarn from raw silk or silkworm cocoons. And then it is again sold to the person who will then further selling it to the industries. Same is with raw cotton. Now, till this point, you have all the agriculture items. Now comes the second category of government. Now, there are two types of lottery. One is the state-run lotteries and one is private lotteries. The state-run lotteries are what are covered over here because in that case, the supplier is the state. Again, it is the state government because lottery is part of betting gambling since history. So it has been under the state prerogative. So wherever the state government is supplying lottery, the tax on such lotteries is paid under RCM by the lottery distributor. Similarly, when the government is supplying its old discarded assets like vehicles, or when they have seized or confiscated, so they will be doing nilami, that is the auction of these seized confiscated goods, or where there is raddi or some waste lying in their offices, all these raddi and waste are sold. So when government is selling any of these three things, old vehicles, very common, and then majorly the seized goods, and then all the raddis. For that particular transaction, the government is kept outside the GST law by not keeping the responsibility on the government. It is now shifted to the recipient. Now, this is a very new addition, metal scrap. It is, you can say, hardly few months that this has been introduced in RCM list. So basically, why it is introduced in RCM list? Government found a lot of bill trading happening for metal scrap, lot of fraudulent transactions happening for metal scrap. So just to bring it under the scanner, see, by putting it RCM, you are not stopping it, but by putting it under RCM, what was going unrecorded, unnoticed, and which was creating a scope for fraudulent transactions, they have brought it under RCM. So wherever any unregistered, so these are generally the Bhangarwalas, the unregistered suppliers, and when they are selling to big industries who are the registered recipients. So generally you will find this, that Bhangarwalas take the metal scrap either from our household or they go and take it from the markets and they sell it to the big industries who require them as raw material where it is melted and converted into the raw metal. So this is the transaction where now the industries who are procuring these metal scrap from unregistered person. See, where it is from registered person, the transaction is being tracked, so it is not put in RCM. But where these industries are buying something from an unregistered person, in order to track that transaction, they have put it under RCM. So this is the list of RCM with respect to goods. Now we come to a very important part for exams, that is RCM with respect to services. Now for these services, the tax is to be paid by the recipient. But before we study this list, I would like to bring to light a very important aspect, that many times when we read these lists and when any question in exam comes, or maybe in practical life when you are handling this, we presume that okay, since it is given in RCM, you have to pay tax and the recipient is the person liable to pay tax. No, you should always follow this. So there is a transaction. We studied this in the previous class also. Check whether the transaction is a supply. If yes, check whether there is levy, that is all the components that we are studying above is satisfied. And check whether it is exempt or taxable. If it is not exempt, then only you go to determine whether the tax is payable under forward charge or under reverse charge. So FCM is forward charge, RCM is reverse charge. Normally what happens, like here, there would be few transactions which, since you find the names here, for in all cases, you assume that, okay, since the name is given under RCM, you have to pay tax and the recipient has to pay tax. Sorry, maybe the transaction is exempt. Maybe it is not a supply only in the first place. Maybe some condition of levy is missing, so there is no tax applicable on the transaction. So first, analyze each of these transactions in this sequence, and then only you can proceed to determine the taxability and who is liable to pay tax. Now, coming to the first and the most important transaction under RCM, that is the goods transport services. For this, there have been stage-wise lot many amendments, and it has been very beautifully put below. So let me take you to the analysis part instead of this bare provisions. Now, when you come to GTA, what is very important in GTA is, now this is how I will check GTA. So within GTA, you have to first start with that it should be a transport of goods by road. So this is firstly the transaction. If this is not the transaction, you will not proceed to check this entire entry, because this entry is restricted only when the transaction is transportation of goods, and that also by road. Now in this, you have to check whether the transporter is a GTA or a GTO. If the transporter is a GTO, there is no GST, the transaction is exempt. When the transporter is a GTA, again, some of the transactions done by GTA are exempt, remaining are taxable. And then whatever are taxable, then you come to this part as to who will be liable to pay the tax. But before I come to this part, who will be liable to pay the tax, let us start from very basic. So whenever in the exam question you are given any transaction and you need to come to the last point as to who is the person liable to pay tax or how much tax is to be paid, you have to start from this first. So first check whether the transaction is dealing with transportation of goods, most important by road. If the transportation of goods is by air, by sea, we will not come to this entry. Only where it is by goods, we come to this entry. Now in this, there are two possibilities that the transporter is a GTO or a GTA. Now interestingly, there is no such term like GTO in the law. I repeat, there is no such term like GTO in the law. This is a term curated by me or curated by many other professionals just to distinguish between what is taxable and what is exempt. Now, somebody will ask, sir, what is GTA? What is GTO? So please understand, students. So firstly, we are talking about a transporter. So something you should visualize all the trucks that are running on the roads from very smallest chota hati wala, that small van carrying goods, to the biggest, which are carrying very huge machines or very huge equipments. All those are goods transporters. Now, within that, what is GTA? What is GTO? There is a small problem with the distinction. When you see the definition of GTA, which is provided in the notifications, they are saying GTA is a person who issues consignment note. So he does all other things like transportation of goods are by default. But what is the main distinguishing factor which people try to bring out is GTA is the one who issues consignment note. So who will be a GTO? The general answer people are drawing, who does not issue consignment note. Now the question is it so simple and straightforward that the person who is issuing consignment note will be a GTA and who chooses not to issue a consignment note? Now this word is very important. So is it purely on my wish that if I don't want to issue the consignment note, will I be outside GTO? Now the people are interpreting the definition like this, but I believe that is not the intent of the law. When the law says GTA means a person who issues consignment note, I think we should read it the person who is liable to issue consignment note. Now you'll say, sir, what is the difference? See, I am a person who is liable to do so many things, but I am not a compliant person. I don't follow the law. So I don't do that. Now, if I don't do that, whether it will change my category? Answer is no. So this is where people are, according to me, taking this too literally. They are reading this definition as that if I don't issue a consignment note, whether I was liable or not, don't check. They say that simply, if I have not made a consignment note, I'm outside the GTA category. I don't believe so. So according to me, the person who is liable. Now the question is from where this liability comes. This comes from an act. I'm not remembering the word, but if you'll Google, you'll find it. Transport of goods by road. There is some act with this terminology, Transport of Goods by Road Act. Now, this is the act which makes someone liable to issue consignment note and others not liable. And I believe that is the difference between a GTA and a GTO. The person who is made liable to issue consignment note will always be GTA. Who is not made liable can be called as GTO. And what is the big difference in GST? If you are a GTO, that is a transporter who is not a GTA, that is who is not fitting in the definition of GTA, the biggest impact is you are exempted from paying GST. So whatever goods you are transporting will make no difference. If you are a GTO, you don't have to pay tax on any goods transported. Now this is where people are trying to put everyone in GTO, but that is not correct. Now the question is, who is the person who is liable to issue? Means how to practically distinguish between GTA and GTO. The answer is consignment note condition, but how? So let me explain you with a very simple example and a very simple practical input. So let us say I'm shifting my office from one location to another location in the same city. For this, I need someone who will be carrying the goods in his truck and delivering it to the other location. Now, here, there are two ways how you can do it. What are these two ways? I contact a truck wala. I tell him, ki boss, see, this is my first location address, this is my second location address, and the goods have to be delivered there. He agrees. But the understanding between me and him is such that the entire transport is monitored by me, it is under my control, and at no point of time I have given the control of goods to him. This is the deciding point. If I am giving the control of goods to him, he becomes a GTA because he becomes liable to issue consignment. Now, see, this difference of GT and GTO will happen only within city transport. Once it is an intercity transport, I am sending goods from Baroda to Ahmedabad, which is an intercity between two cities, it will by default be GTA because the moment it is two cities, I cannot monitor and control. I will never know how are my goods traveling, who is shifting the goods, who is actually driving the truck. I will have no idea. I give the entire control of my goods to the person, the transporter, means I give it to him, I go back home. He will decide when it will be loaded, in which truck, how it will be dispatched, everything he decides. So he has the control over my goods. Yes, Neha.
Sir, GTA is the goods transport agency, but what is the GTO, goods
It
transport?
is operator. See, that's why I'm saying it is not a term used in the law. We have just coined this short form to distinguish. If I say it is not a GTA, so I should name it. So we have named it as goods transport operator. So it is also a truck. This is what difference I'm trying to explain your students. It is also a truck. It is also going to transport my goods, but the difference is when my goods will be under the control of that transporter, he becomes GTA because he becomes the person liable to give me consignment note. But where I am getting the goods transported from a truckwala, but since it is within my city, it is for a very short distance. I am controlling the whole transport. Like virtually, me or some of my person would be going in front of that vehicle. He would be just keeping a watch on where the vehicle is going. I will decide how the goods will be loaded on this, when it will be loaded. So I am taking the charge of the entire transport. The transport is happening under my control. In that case, the truck operator will be only a goods transport operator, but not a GT. And once he's a GTO, there will be no GST because that transaction is made exempt. You'll study this in the exemption topic, right? Now, when I have given the goods control to that transporter, he becomes a GTA. Now, when you read the GTA exemption entry, you will find that even for GTA, there are some transactions where the transport done by GTA is also made exempt. Again, the list of those transactions you study in your exemption chapter. Now, barring those exempted entries, for remaining all transactions done by GTA, GST is applicable. Now, once you conclude that GST is applicable, now you come to this part to determine who is liable to pay. Now, originally, when the GST law started in July, they had made completely this liability under RC. So it was very straightforward entry. Then, if I'm not wrong, somewhere in December 17, that is in the first year of GST itself, they modified this entry to even allow the tax to be paid under forward charge. So from December 17, there was both the options forward charge, reverse charge. And then now somewhere in 22, they have further amended this entry. Now, how to understand this? It is simple, not complicated, though there are many aspects. So first, you have to start with transaction. If the transaction is transport of goods by road, check whether it is GTO. Yes, exempt. No going further. If it is GTA, go to the exemption list to check whether it is one of those transactions which are made specifically exempt. If that is the case, again, no going further, you will stop here because the transaction is outside GST. But if it is not falling in the GST exemption, means the transaction is taxable. Now you proceed forward as to who has to pay this tax. Now in this, the present position is who has to pay this tax, whether under forward charge or whether under reverse charge. This option is purely now with the GTA. So the GTA is the person who is to decide whether he wants to pay tax, that is under forward charge, or he wants to shift the responsibility on the recipient to pay the tax. Now, what is very important over here to understand is this option is annual. Means he has to exercise this option at the start of the year. Once he exercises the option of forward charge for that whole financial year from 1st April, let us say we are in the financial year 25-26, to the end of this financial year, he will be in this option only. Between the year, he is not allowed to switch to RCM. Now, let us say next year, he wants to switch to RCM. Again, before the start of the year, he can go to the portal and select the option of RCM. Then the next whole year, that is April 26 to 31st March 27, he will not be collecting the tax. The tax liability will be shifted to the recipient. So the present position of law is now this option of forward or reverse is with the GTA to decide, and the GTA can switch between these options. But this switching is allowed only at the start of the year. Once you decide something, that continues for the whole year. Yes, Swaminathan.
Sir, my question is whether the GTA has opted the FCM or RCM, how the recipient will know, sir?
Good question. I just mentioned that this option has to be exercised on the portal. When you exercise this option on the portal, so see, I am GTA, I am registered. You are my recipient, you are also registered. The moment I exercise this option on the portal, if you put my GST number, you will now be able to see some details about me on the portal. My name, my GST number, my address, etc. And in that, you will be also able to see this. This is point number one. Second, let us say you are unregistered. Still understand this. Anybody can go to the portal and see anything about anyone, because the moment you put the GST details, you can see the details about anyone. Yes. So even if you are unregistered, you'll go to the portal, you will put the details and you'll get my details. Now, but that is not the only thing. When I am preparing my invoice, because that will be prepared by me, I will be uploading my invoice on the portal in the GSTR1 returns, which will be appearing in your GSTR2A 2B returns. In that also, I have to again mention, so on my invoice also I have to mention whether this will be under RCM. And when I'm uploading in the GST portal in my GSTR1, I have to again tick the option of forward or reverse. Now, interestingly, since I have to already make this option at the start of the year on the portal, let us say I selected the option of forward. Then when I'm preparing my GSTR1 or filing my GSTR1 return, I will not have the other option of RCM. So the portal itself will make it forward charge. So from my invoice and from my GST1 return filing also, Swaminathan, you will get to know whether this transaction is under forward or reverse. Fine, beta?
Sir, while he raising the invoice, on the invoice itself, he will specifically mention it is a forward charge or the
Yes.
reverse charge.
Yes. First on the invoice, and second when he is uploading it on the portal.
So recipient has to check on the invoice whether it is every time he has to check it, because
Yes.
the option is given to GTA.
Yes.
For every year he can change the position option. So he need to be more diligence on this, the
Yes,
recipient.
recipient. Very correct, beta. You're right. So whenever students, so I'll just extend Swaminathan's point. He has raised a very good point. So whenever you as a recipient are making inward supplies, inward purchases, you need to keep all this RCM list thoroughly in mind so that whenever the invoices which are pertaining to any of these entries come, you have to put it in a separate file. This is what practically we advise so that you know that at the end of the month, when the time comes to pay the tax, you will simply pick the file of RCM purchases and you will calculate the tax and discharge it. Also, for such type of entries where you'll have options or where there are will proceed, you'll find that there are more such transactions where there are two possibilities. So those transaction purchases also either immediately when the transaction is happening or later on at some point of time, you can check the bills to check for all these conditions. And once you find that yes, these conditions are satisfied, it should be kept in the file of RC. Right? This is what generally we suggest.
Right, sir. And one more thing, if the GTA is not specifying whether on the invoice whether it is a RCM or FCM, it's always the recipient better to check on the portal
Exactly.
whether, yeah, otherwise, no, there is a chance for not mentioning on the
100%.
invoice.
100% possible. Nee, I'll tell you one more difference. See, there is one more way how you will come to know whether the transaction is under forward or reverse. And that is the most simplest way. See, your transport charges are rupees 10,000, right? And let us say the GST on that is 5%. Now, there will be a confusion only when the GST rate is 5, because that rate you will see it is falling under forward also and reverse also. The moment the rate is 12, there is no doubt it is forward. Correct? So, first is if the rate charged by him is 12, no doubt it is forward. But if the rate is 5, then only there is a problem or there is a confusion. But I'll tell you the simplest thing. See, if it is going to be forward, let us say I am the transporter, you are the recipient of this service. I have to pay this tax on the portal. Means I will be going and at the time of filing my monthly returns, I'll be paying this tax. Now, since I have to pay this tax, how much will I collect from you? I'll collect from you 10,500. But if this same transaction you have to pay tax, I will simply collect 10,000. So what amount the supplier is collecting from you, that also is a very good indicator as to whether it is forward or reverse. Because if it is forward, he'll collect the tax component. If it is reverse, he will not collect the tax component. Correct?
Right, sir. Even that case also the toll percentage, if the accountant or the manager is not aware about that, then he will wrongly choose that rate also. It's always better to verify it.
Obviously, see, I'm giving you so the different flag off points. We call it as the flag off points, how you can determine whether it is forward, reverse. Correct?
Yeah,
Now,
right, sir. Obviously. Thank you.
yes. Now let us say the GTA is opting for RCM. That is, he's opting not to pay tax himself. He wants the opposite person to pay tax. So it means he has opted for the RCM option. In this case, the rate which will be payable is always 5 when it is under RCM. And the person who is liable to pay is you, that is the recipient. But if the GTA has opted to pay tax himself, which we are calling as forward charge, now within this, the GTA again has two options, 12%, 5%. What is the difference? In both cases, the tax is payable by the GTA under forward charge only. The difference is if he is opting for the rate of 12%, the GTA can avail ITC. If he is opting for the rate of 5%, the GTA cannot avail ITC. So, where the GTA has opted for 5% forward charge rate, he has to pay the entire 5%. He cannot take any input credit. But where he's opting for 12%, he can take input credit. Yes, Neha.
सर मेरी एक प्रैक्टिकल क्वेरी है
प्लीज पूछे ना.
सर एक जीटीए कंपनी है और उसने उसका रजिस्टर्ड है वो ही हैज द जीएसटी नंबर but
ठीक है.
even though he is not opting for FCM and he is asking
Yes,
for
yes, yes.
RCM, is it
Hello.
possible?
Yes, it is. In fact, see, I told you, beta, even for opting for RCM, you have to go to the portal and select the option. And when that is possible, when you are a registered person. So Now, since the option can be switched every year, you can remain registered. So, in short, what your basic query is, can a person who is registered can also be under RCM? Answer is yes. He can remain registered and be under RCM. Why? Because immediately next year, if he wants to switch, he should have the portal open to switch. So it is allowed, beta, no problem at all.
Okay, okay, sir. Thank you.
Yeah. So within the forward charge, the GTA can levy 12%, where he will be able to get the ITC of all his inward supplies, utilize it. And if he opts for 5%, the GTA will not get the ITC. Then that entire 5% will be the tax which is payable out of his pocket. Obviously, he'll collect it from you, but he will not get the ITC. So this is about the GTA's RCM entry. Now, after GTA, Acha, one more thing just for your clarification. So here, there is one more case. Now, I'm not talking about the exemptions. All these things we'll study in the exemption part. That I'm not bothered about right now because it is relating to exemption. What is important is what we were discussing, that for the purpose of that the recipient should come to know, they have put some specific conditions. So one is exercising the option. The second is that when the supplier, that is the GTA, has issued tax invoice, he is required to make the proper declaration on the invoice. So this is how the law has also ensured that the recipient should come to know whether it is under forward or reverse. Fine. Now, coming to the second RCM entry, again the same thing. You have to go by the same steps. What is the transaction? The transaction is a legal service. Now, it is a supply and all, that is no doubt, but you have to check whether it is exempt. Because again, for legal service, in the exemption entry, we will study that where this legal service is given to individuals, that is to non-business entities, it will be exempt. Secondly, when it is given to small business entities, who are small business entities whose last year's turnover was below the registration limit of 20 lakhs, 40 lakhs. So if it is given to small business entities, it will be exempt. So legal services are exempt in two cases, where they are to non-business entities like individuals, etc., who are not business, who are taking legal services for their personal, some property matter or some family matter, that is exempt. And business entities taking the legal services for businesses, but those business entities are small, for them also it is exempt. So it will be taxable only when the services are taken by large, let us use this word, business entity. Then only it is taxable. Again, important is the business entity should be in India. Wherever the taxable territory will be used, students, you can just write India instead of that. So this reverse charge will be applicable only when the business entity is in India, because the moment the business entity is outside India, it will become export. So it will again go into the zero rated and there may be no tax. Now, interestingly, when all these conditions are satisfied, the law says there is no option here. So the option which was given to GTA is not there. It will always be under RCM. Means the tax would be paid by this large business entity. So it means advocates never has to pay tax. However, there is one interesting scenario. This is that scenario that where a senior advocate is giving this legal service to any other advocate firm. So a senior advocate giving legal services to other advocates, which may be senior, junior, whatever. This is the only transaction which is under forward charge. Interesting. So now since on both sides you have advocates, so that is where the distinction has been made out, that where the supplier is a senior advocate, they have cast the responsibility on the senior advocate to pay tax. So this is the only transaction of legal services which is under forward charge. All other transactions of legal services would be either exempt, and if not exempt, wherever they are taxable, they would be taxable only under RCM. It means the tax would be paid by the large business entities. Now, important point is, what is a legal service? Legal service means service provided in relation to either you are only advising, consulting, or you are even fighting the case for them. That is, you are giving the representational services, and this may be in any branch of law. Now, interestingly, tax is also a branch of law. We as chartered accountants are regularly doing this. We are giving advice on tax, we are doing consulting on tax, and we are also doing their representation. That is, we go to the department to fight for our clients. Now, the question is whether our services relating to advice, consultancy, or representation would be falling under RCM. The answer is no. Because in order to be falling under RCM, you should be acting as an advocate or a senior advocate. If you are neither advocate nor senior advocate nor a firm of advocates, then even though you are doing the same activity which falls in the definition of legal service, it will not be. In fact, this exemption also, which I was telling, is not applicable to CAs. So even though I'm giving some legal consultancy relating to taxation to some individual for his personal income matters, which is not part of business, still it is taxable. We have to pay full tax, and all our services as chartered accountants are under forward charge only. Even though we are doing the same type of activity for some clients, but that will always be under forward charge, and there is no exemption. So for there being exemption, an important requirement is one, it is a legal service as per this definition. Two, the service has to be given by advocates. Now there is an interesting scenario. This can be a case study. So I am a chartered accountant, plus I have completed the degree of law. Now the question is, I am a chartered accountant also. I have also completed the degree of law. As you'll find, many are having both the qualifications. Now, if I'm giving this service, same tax consultancy, whether I will be eligible firstly for the exemptions wherever they are, and two, where the exemptions are not there, whether my tax would be payable under RCM. The answer is which COP you are holding. So let us say I have law degree because I have passed the exam, I have qualified, but the COP I am holding today is of CA. Then no exemption, no RCM. All my tax related consultancy advisory will be taxable and I have to pay tax. But let us say tomorrow I switch. I take COP as an advocate. So obviously this will now be only a degree. I have a CA degree, but I have surrendered the COP and now I have taken the COP, certificate of practice for law. That is, I'm becoming advocate by taking the certificate of practice. Then this entry would apply to me. See the difference. I'm doing the same thing. I'm giving tax related consultancy only, but the answer changes.
Yes, sir. The code of ethics also is not allowing the multidisciplinary services.
Yeah.
Either,
So
yeah.
You can have multiple degrees, but you can hold COP only of one of the qualifications.
Yes, sir.
But then the main point is how this entry would apply. You have to see which COP at that moment of time I am holding. Next, services by tribunals. So there are different tribunals. Again, you have the exemption entry similar to the lawyer case, that where the arbitral tribunal is doing something for individuals, that is non-business entities, or for small business entities it is exempt, and when they are doing for large business entities it is taxable under reverse charge. That is, the business entities have to pay tax, and again same condition, they should be in India. Yes, Swaminath.
Sir, please explain when the forward charge is applicable on legal service. The senior advocate you are talking about, no, that I am not clear.
I already explained, Nabeta, that where you are a senior advocate and you have given the same legal service to other advocates. So see, many times what happens, I'm an advocate, a very big case, a critical case comes to me. So I go to a senior advocate, either to take his advice or either to take his consultancy or either making him the main counsel, that for my client, he will be the counsel. So it is my client. I'm handling the client, but the services are taken by me from a senior advocate. In that case, there is a flow of service from the senior advocate to me. When the senior advocate will be raising an invoice on me, see, I will be raising on my client, that will come surely under RCM. But where the senior advocate is raising invoice on me because I have taken his services to give services to my client, in such a case, this entry will not apply because that is the case which is the only case outside this RCM. So tax is there and it is under forward charge.
Sir,
Fine. So
here, you see, here the senior advocate to advocate. Senior
yes,
advocate to advocate firm only, not to the individuals,
advocate,
not to the not
advocate.
others.
See, advocate anyone, whether individual or firm,
Okay,
whether
only
senior, whether senior or not senior. So
yeah.
recipient can be any of the advocates, but the supplier advocate should be a senior advocate.
Oh, supply should be the senior. The other recipient only advocate or
Any
senior or firm
advocate.
of the advocate.
Yes, any advocate. Correct.
Oh, okay, fine, sir. Yeah, now I am
And
got
when
it.
and
Thank you.
when the senior advocate is giving to a client, so let us say senior advocate is advising a company, there it is always reverse charge. Only when on
RCM.
both sides, see, on both sides there are advocates, then only it can be under forward charge if the supplier is senior.
Sir, how to know what is senior advocate?
The senior advocate is a designation. So when I complete a minimum years of practice as an advocate, I have underdone some minimum number of cases. I make an application to the court where I am registered to designate me as senior advocate. Now the court has an option to give me that designation or not. The moment the court gives me a designation, I start using the word senior advocate on my nameplate because that is a very privileged designation, right? Yes, Neha.
सर माय क्वेरी इज दैट कि अगर सपोज कोई सीए अपने क्लाइंट के लिए लॉयर या एडवोकेट से कोई सर्विसेज लेता है ऑन बिहाफ ऑफ दैट क्लाइंट, तो उसके केस में भी लॉयर के जो लगेंगे वो आरसीएम ही लगेगा बिकॉज वो एडवोकेट टू एडवोकेट तो है नहीं, अदर पर्सन है.
Correct. Now, see, understand this. Now, you are the CA, and let us say Priya is the client. Now, Priya may be individual, Priya may be HF, Priya may be company, whatever. She comes to you for some work. Now, this work is very technical relating to some advocate. Now, Priya is your client. You have agreed the fees of 50,000, let us say, for this work. But for this work, you need some legal advice, legal consulting. So you are taking that service from the advocate where he is going to pay 20,000 rupees. Now, please understand that in this case, there are two different legs of the transaction. One between you and the advocate, and the second between you and client. Now, interestingly, in this scenario, what I have just given, both side taxes are to be paid by you because where you are giving a service to your client, you are the supplier. There is no reverse charge available to us, as I already explained. You pay tax
Yes.
under forward. When the
Yes.
service is between the advocate and you, it is falling in this entry because this advocate is never liable to pay tax. You will be paying tax under RC. In this, let us say this advocate is a senior advocate. Still, you will be liable to pay tax because you are not an advocate or advocate firm. Correct?
Okay.
So, in all cases, wherever you as a CA are taking some services of an advocate for some matter of your client, it will always be under RC. Correct, beta?
Okay, sir. Yes, sir. Yes, sir. Thank you.
Perfect. Great. Any more questions on this?
No, sir. Clear, sir. Thank you.
Great. See, all these pointers, please keep in mind because this is how the case studies are drafted. This is what you will be called upon to answer in the case study. Right? Should we proceed?
Yes, sir.
Chalo, let us take a 10 minutes break. We'll have one more break of 10 minutes and then I'll come and take the other entries. Fine?
Fine, sir. Thank you.
there are so many events where you take some business as your sponsor. So let us say there is an ICAI conference in which there are different, let us say, software companies or these book selling publishers who become the knowledge partners. So basically, when they say they are the knowledge partners, or like you are watching a Kapil Sharma show which says that it is powered by, so all those are the sponsors. So when any such event, any such serial, any such activity is sponsored by somebody, this particular entry triggers. Now, this entry has a small amendment. What it says, if the supplier of the service is a person who is not a company, body corporate means a company for simplicity, but the recipient should be a body corporate or a partnership firm, then only the reverse charge applies. If any of these two conditions are not applicable, that is, let us say the supplier is a body corporate, then even though the recipient is body corporate, it will be forward. Secondly, if let us say the supplier is a partnership firm, but recipient is none of this, recipient is an individual, then also there will be forward charge, it will not be reverse charge. So in order that the reverse charge applies here, all the conditions, that is both sided requirement should be there, that here the person should not be a company and here the recipient should be either a company or a partnership firm. Next coming to services by government. Again, in this category, you have to first check whether it is a supply, because if you remember, in no supply, we had certain services which were to be notified where the government is acting as a sovereign. So where the government is performing something as a sovereign, it will be no supply. Secondly, if you remember, there was a notification saying that wherever any activities or services which are falling under Article 243W, 243G, any of those activities are done, again it will be considered as no supply. So when it comes to government service, so the transaction is what? Services by government, not to government. That is a different thing. Here we are talking about services by government. You have to check whether it is no supply. If it is no supply, question is over, no need to proceed further. But if it is supply, now you proceed further to check, is it part of the exemption notification? Again, there are many different exemption entries which exempts government services. And when it is not exempt, then finally, I will say 90% or 95% of the taxable government supplies are under RCM. Now only few of them are put in forward, remaining all are under RCM. Now practically what comes under RCM is, other than the exempt and no supply ones, RCM covers the services which is given by government to large business entities exceeding rupees 5,000. All this you come to know when you read the exemption notifications. I'm giving you the gist of that. So what will come under RCM majorly is where the government is providing services to large business entities, obviously except no supply and except the list of exemption. The remaining services where government is giving to large business entity, again large means what? Whose last year turnover was exceeding the registration limit. And the value also is not very low. It should be at least 5,000. When all these conditions are satisfied, the tax is under RCM. Otherwise, either it would be exempt or it may go under forward charge. Now let us read this entry. So it is saying services are supplied by. So as I said, we are not talking about services given to government. We are talking about services which are provided by government to us. So services provided by central government, state government, union territory, or even local authority to a business entity. But again, you can add the word large business entity and the value exceeds 5,000 because all this is given in the notification of exemption. Now, interestingly, They are saying that all services given by government to business entities will be falling under RCM, where the business entity, obviously again in India, will be liable to pay tax. But this has some exception. Now, when I'm saying exception, what it means is that these would be under forward charge. So as I said, 95% of these services are under RCM, but there are still 5% of services of government which are taxable and which are under forward. That is where the government has to take registration and pay the tax. Now, what are under forward, or let us say what are not under RCM, is indirectly under forward. The first is renting of immovable property. But let me tell you, this is also under RCM because of the new entry which we are going to study below. See, entry 5A. Correct? So I'm writing over here 5A entry. So this is for the time being excluded from this original entry 5 because it has to be covered specially separately under the next entry. So this is under RCM, but as per the next entry. All remaining which are excluded from here are excluded because they will all go under FCM. What are these which are under FCM where the government has to take registration and pay tax? Services by the Department of Post. Services by the Ministry of Railways. Third, services in relation to what? Aircrafts or vessels, whether inside or outside the port airport. So all these services which the government gives the permission to the aircrafts and vessels to enter India, to be in India, all these services are in forward. And then transportation of goods or transportation of passengers. Now again, it is excluded from here because wherever it is taxable, again, when we go to the exemption entries, you will find that for transport of goods, like how I was explaining in GTA, and even for transport of passengers, there are some specific exemptions. Other than those exemptions, where it is taxable, in case of passengers, it is always forward charge under passenger. RCM is very rare, though you'll find that entry also, but it's generally forward charge. In case of transport of goods, many cases are under reverse, but there are again few cases which are under forward. Now, coming to the entry which is carved out from above and put as a separate entry. What is this service? Again, it is the service supplied by the government, by the central government, but now they are saying excluding Ministry of Railways. Why? Because that is already covered here. You can see it is already, because of this, it is under forward charge, right? So that is why no need to cover it in 5A, it is already covered in 5. Then services provided by state, services provided by union, or services provided by local authority. Now, what is the service? The service is by way of renting of immobile property to a registered person. Now, this is what is the special carve out. They wanted to bring it under RCM only when the recipient is a registered person. Now, why they have done this? When we will proceed, you will find that again you will have an entry relating to renting of residential, and where it is again put under RCM but with the same condition. So same thing they wanted to bring out over here, that wherever there is renting of immobile property, if the recipient is registered, then it would be under reverse charge. But if the recipient is not registered, it would continue to be under forward charge. Is this clear? So for government, there are two entries. Now, this is an entry which is applicable to all of us. Service by way of renting of residential dwelling. So when a residential accommodation like a flat is given on rent, firstly, the first thing that you should keep in mind is again the exemption. So there is exemption. However, the exemption also has an exception that where this flat is given to a registered person. So let us say a bank is taking a flat on rent. So it is taking a flat on rent from you. Why? Because the bank wants to give to its manager as a perquisite. So in such a case, when a registered entity like a bank, maybe some insurance company, many corporates, because they have to provide it to their directors, to their employees. So when they take some flat on rent, they have to pay tax under RCM. So be assured, as a owner of the flat of a residential accommodation, you are never under GST. Either your service is exempt if the opposite person is unregistered. If the opposite person is registered, your service is under RC. So it is like the lawyer case. Either your service is exempt or wherever it is taxable, it is under RC. Same is with your case, that is residential accommodation. Now comes an interesting entry. What it says, service by way of renting of immobile property, but other than residential. So let us call it as commercial. So now what you are giving on rent is shops. What you are giving on rent is some type of office, which is a commercial space, some type of a godown. Now, in this case, if you see the difference, here it was any person, here it is unregistered person giving to a registered person. Here it was any person giving to a registered person. So between renting of properties, there is a subdivision, residential, commercial. Residential, as I already mentioned, whoever you are, for you as a property owner, there will be no need to pay tax under forward, no need to take registration. And even if you're registered, maybe for your other supplies, you will be exempted for residential accommodation. So one, you are giving residential accommodation to unregistered, it is exempt. Still, you don't have to pay tax. If you are giving to a registered, it is taxable, but it is taxable in their hands. So for you, it is still non-taxable. But when it comes to commercial, this entry has two requirements. One, you should be an unregistered person. Now, there is a possibility you have taken registration under GST because your other supplies are taxable. Now, when you have taken registration under GST because your other supplies are taxable, in that particular case, you will never get the benefit of RC. Firstly, let me tell you, there is no exemption for renting of commercial accommodation. So anyways, commercial commercial accommodation renting is always taxable. So there is no benefit of exemption like for the residential we have. So you as a owner of a commercial property like a shop, like a godown, like an office, you are, or you may be, I should change my words, not you are, you may be liable to pay tax. Because firstly, there is no exemption. And secondly, this benefit of RCM will be available to you only if you are already unregistered and the other person is registered. Now, let us say you are unregistered and the other person is also unregistered. Then it is not under RCM, it is under FCM. And there is no exemption. Then the question comes, are you required to pay tax? Technically, yes. But then you have that 20 lakhs basic limit of exemption for registration. So until unless your total supplies do not cross the 20 lakhs, even though this commercial property transaction is taxable to you, you may still end up not paying tax if your total supplies in a year do not exceed 20 lakhs. But if you are unregistered, giving your commercial place on rent to another unregistered, so RCM does not apply. There is no exemption, and your turnover exceeds 20 lakhs. Now you have to take registration and start paying tax. Now in this, there is again an important amendment. So what we were saying, you are unregistered, giving to a registered, no problem. You don't have to pay tax. The registered person will pay tax. But if this registered person is a composition dealer, like you have a shop which you give to a kirana wala who is going to run a kirana shop over there, and the kirana shop has taken registration under GST, but as a composition dealer, now again the liability comes back to you because it is not under RCM. Because for RCM the requirement is not satisfied. There was no exemption. I already mentioned there is no exemption for this. So now the liability comes back to you. Again, if your limit of 20 lakhs has not exceeded, no problem. No need to get registered and pay tax. But if your limit of 20 lakhs has exceeded, now you'll have to take registration and pay tax. Swaminathan, sorry, I forgot. Kirana is a Hindi term which means a grocery shop. So Kirana means grocery. So when I'm saying Kirana shop, it means a grocery shop. So why I gave you example of grocery? Because generally they are the ones who take composition scheme. So for that matter, any business like your shop, somebody has come to start a parlor service, a hairdresser service. So even if that person has taken a composition scheme, it will not be under RCM. The tax liability will come back to you. Now, if you are registered, you have to pay tax. If you are unregistered, now you have to check the 20 lakhs criterion. So when it comes to renting, you have to be clear whether it is commercial, whether it is residential. Correct? And this is important. The renting wala entry is very important. So please be prepared because there is amendment, a continuous ongoing amendment. All these are new entries, 5AA, 5AB. These were added later. And within these entries, again, there were amendments. So you should prepare both these entries, 5AA and 5AB thoroughly because that is very, very important. Now coming to the entry relating to real estate. I'm sure you all would be knowing what happened. What happened? I'm sure you all would be knowing that real estate underwent some amendment in the year 2019. From 1st April 19, the real estate services or the entire real estate sector, I'll say, underwent a major change. Now, because of this major change, in majority cases, all tax liability has been shifted to the, for simplicity, I'll use the word builder. Now, what is this service which is shifted to builder? Is, I'm sure you all know this term, joint development agreement. This you come across even in income tax because there are specific TDS entries, there is specific capital gain entry. So when you are entering into an JDA transaction, joint development agreement transaction, where let us say you are the landowner, I am the builder. I contract with you that I will be coming on your land, I will be doing construction of the building on your land, and since the land belongs to you, I will give you some portion of this constructed building, which may be flats, shops, offices, whatever, to you against your land, and the remaining will be mine. This is the simplest form of JDA. So JDA is where we come together, you have your land, I have my construction services capability, the investment in construction. We come together to develop this project, develop this building, and in that building, against your land, you keep some flats, shops, and against my construction expenses, I keep some flat shops. This is JDA. Now in this, there are different transactions. So you are landowner. You have given me, I am the builder who is called as promoter here, the development rights of your land. So using your development rights only, I will construct this building. And some portion of this building I will be giving to you because you have given me the development rights. So what I'm giving to you is some portion of the constructed building. Remaining portion I will be selling to outside customer, for which again you will be having GST, which we studied in the previous topic also, that where any booking is taken while the building is under construction, that is what will be taxable. That is anyways taxable under forward charge. That is builder has to pay tax. Now, for this part, that is you as a landowner gave me the development rights, your land development rights, using which I constructed this building. So this is a supply done by you to me. So here you are any person means the landowner. Here you are any person means again the owner of this property, which is given on lease. So in both cases, you are the landowner and I am the builder developer. What have you given? The service supplied by you, that is a landowner, is the transfer of development rights, or in some cases it is called as the FSI. Why you have given me this? So that I can construct a project like I am constructing a building. Same thing, instead of giving me the development rights, you have given me this land on long-term lease, which is for 30 years or more. Generally, it is 99 years lease. It is given by you, that is the landowner. And what is the consideration? The consideration is in the form of upfront amount. So against this long-term lease, I will be paying you upfront amount, which is called as premium, lease premium, if you would have heard in accounts, salami, cost price, development charges by whatever name called. And along with this, I may or may not be paying you periodic rent. And again, you have given this to me so that I can construct a building over there. So whatever you are giving to me is some sort of rights in this land. Either it is the transfer of development rights or either it is giving me the lease rights. And against this, I'm going to make payment to you. In such a case, this transaction comes under RCM. So effectively, as a landowner, you don't have to pay tax on the supply of development rights by you to the builder. I will be paying tax under RCM. Now, what is the note given? This supply of development rights or FSI or long-term lease by the landowner to the developer are exempt. Now, there is an exemption subject to the condition that the constructed flats are sold before issuance of completion certificate and taxes paid. So you'll find that in all these RCM entries, we have to check the exemption also. But here, I will say don't get complicated by the exemption. It is not of much relevance. For the time being, as far as this is concerned, only remember the RCM because this exemption is very specific and it is very limited to a particular case. Okay. Now, coming to again a very important entry, students, for your exams, that is services supplied by a director. Now, it appears simple that there is a director and there is a company. Now, directors are appointed by the company and the directors provide services in the form of running the company. So this is like the service which the director is doing for the company, that it is running, managing the company. Now, for these services, the company pays to the director remuneration. So the services are given by director to company and in return the company pays remuneration. Now the question is whether this service, so what is the transaction? The transaction is the director service to the company. So this is a transaction. Is there any exemption? Answer is no. So it is a supply. Yes. Is there exemption? No. So by default it is taxable, no doubt. The question is who is liable to pay tax? The answer is it will be taxable to the company. So supplier is the director, interestingly, or even a body corporate, and the recipient is the company of which you are the director or the body corporate. And again, you should be, the recipient should be in India because the moment the recipient is outside India, it is export. Anyways, it will fall in some other category. Now, what is the interesting point? There is, or I will say, yes, I will say is only, not was, some litigation in this. So for understanding the litigation, let us go to the analysis part. Yes, Swaminathan.
Sir, here the company or the body corporate located in taxable territory, which means that the export means there is no RCM. When there is a director is providing services to the special economic zone, the economic zone also will be treated as a export-oriented unit, right? Wherein also that RCM is not applicable.
Correct. Because see, why RCM is not applicable? Because when you are supplying services to a SEZ, you will study in the IGST Act, it is considered as a zero-rated supply. So it is a taxable service, but the invoice that you raise is without GST. So it is a zero-rated supply, right?
Yes, sir.
Correct, na? Clear, na?
Yes, sir.
Okay. Now, I said there is still some issue relating to directors, but firstly, let me talk about the issue which has been clarified. Now, within directors, you have two types. One is the full-time directors, and then you have the other type, which you can call as part-time, who are generally the independent directors, the technical directors, who are not on the payroll. What is important about these full-time directors is they are on the payroll of the company, so they stand in the capacity as an employee. Now, this is interesting that where the director is standing in the capacity as an employee, then the service given by director to the company becomes a Schedule 3 transaction because it is service given by employee to the employer in the course of employment. So it becomes a Schedule 3 transaction, no supply, no tax. Now, since there are other directors also, hence there was a confusion. There there was some issue. So we have a circular which says that look at the TDS, income tax TDS. If income tax TDS is done under section 192, so the company, while making payment to the director, has deducted the TDS of the director as per section 192 of the Income Tax Act, which deals with salary TDS. In that case, you are not having any GST on the director services, because even though it is a director service, the director stands in the capacity as an employee. And the moment he stands in the capacity as an employee, it is a Schedule 3 transaction, no GST. However, where you are deducting TDS, again here there is income tax TDS and it is under 194J. So when you are deducting TDS under 194J, it means the director is an independent director, a technical director, but not a full-time director. And the moment he is not a full-time director, what happens is the services of the director become taxable. It is no more Schedule 3. And this service which is taxable, it is exactly what is covered in this RCM entry. So first issue which is resolved, and it is resolved by issue of circular. As what you can see, they have also mentioned about the same director's remuneration and which TDS is deducted. So if the TDS deducted is 192 section of Income Tax Act, it is a salary. It will be Schedule 3 transaction. If it is not, then it will be a taxable supply and the tax would be payable under reverse charge. Now comes the issue which I believe is still pending, though I believe it is resolved. That is, what if the director is providing any other service, not as a director, but as any other supplier? For example, a very common thing which you'll find is, especially in case of family-driven companies, that director has a property which the director gives on rent to the company. Now, in this particular case, a very big question that was triggered. Now, actually, this particular example will not have a problem because we have another separate RCM entry for this, for immovable property, because company would be a registered person. So now, anyways, you have a separate RCM latest entry where this will be covered. But there are so many other services which the director may be giving to the company other than his director services. Now, the problem is when you read the entry simply says services by director to company. It is not saying services in the capacity as a director. Now, this is where in many audits and many other matters, the GST department is raising a query. They are saying that whenever a director gives service to the company, whether in the capacity as director or in any other capacity, all are falling in RCM. This is what is the interpretation of the department, which I believe is technically not correct. But this is how the department is looking at this. And in many cases, they are raising this particular query. However, my understanding, which I think is also to be followed by you in the exams, is only those services which are supplied by the director in the capacity as director would only be taxable under RCM in this entry which we are dealing with, right? Where the director is supplying anything under the capacity not as a director, then it will not fall in the present RCM. It may fall in the other RCM, like I gave you example of the renting example. There is a separate RCM, it may fall there, but it will not fall under this director's RCM entry. I hope this is clear to all.
Yes, sir. Sir, I have one doubt on the Schedule 3.
Yeah, please say.
When the employee is providing service to the company or during the employment or the course of employment, they say GST is there's no supply or no services.
Correct.
But the person is providing services by the professional capacity, but however the person is employee. In that case, Whether the GST is applicable?
100% yes. See, but for that, you have to first understand, Swaminathan, that when you are saying he's providing service as a professional, what does the terms of your contract with the company says? It may be possible that the employee contract or the service contract which you have made with the company is such that you are not allowed to do anything outside your employment. Like many times they say that you cannot do any part-time business, you cannot do anything else. Now, if technically that is what your contract says, so it will be difficult to say that you are doing anything in personal capacity and not as an employee. But if your service contract does not say so, and the company is not deducting your TDS on that amount under 192. So let us say company is making two payments. One is the monthly check that you are getting for your employee services or your employment. And second, whenever you are providing this professional service, the company is giving a separate payment and the TDS on that payment is not covered in 192. That is the employee TDS or the salary TDS. Then definitely this same logic which we are now using for director will apply even to that particular schedule entry for employer-employee. Fine?
Right, so even though the person is employee, the professional capacity, then GST will not be there, no? That
GST will be there.
he is employee
But he is
only.
now, see, read the entire schedule 3 entry, beta. There are words are very specific. Service given by employee to employer in relation to the service contract. In relation to his employee contract. Means there is a possibility, like how in case of director we are seeing. Now, let us take another example. The same employee's property is given to the company on rent. Will you still say that this service is given by the employee in the capacity as an employee? Answer is no. How can a renting service be treated as an employee service? So, you as a person may act in different roles, in different capacities. One role is of employee. But the other role, but as I said, it should be allowed by your service contract that you can do anything outside your employment. So if that is allowed, then you can definitely play another role of a consultant. Swaminathan, what is the doubt?
Yes, sir. Even though he is a professional capacity, even though he is an employee, then the GST is applicable.
Yes. Two things you have to check. One, whether your employee contracts bars you or allows you from doing anything outside employment. If it allows you, then, and second, while making the payment, the company has not deducted your TDS under 192. When both these conditions are satisfied, then you can say that whatever the employee has done has been done outside his capacity as employee, and hence it will not be covered under Schedule 3 and liable to GST.
Okay, sir. Then if the service is exceeding rupees 20 lakhs on those states is applicable state, only that case only the RCM is applicable, or even the small amount.
Why RCM? Why RCM? Better there is forward now. Where is RCM for those services? Tell me. There is no RCM for that. Where is the RCM for that, beta?
Okay, is only the forward charges only.
Yeah, because see, consultant service is not covered in RCM. You're not finding any consultant service, neither up to this point, not even further. Like how as a CA, when I'm giving consultancy service to my clients, is it coming under RCM? Answer is no. So
okay, RCM is not, okay, sir. RCM is not there, FCM is there, but the limit is there, 20 lakhs. If it is exceeding 20 lakhs.
When it is forward charge, the limit is there, no?
Yeah, okay.
Correct.
Right, sir. Thank you.
Perfect.
I a bit confused because no, he is a employee. Oh, why that FCM is applicable? Okay.
See, firstly, again, see, I have always given you all this sequence. What is a sequence? First check there is a supply. Now, if he is in capacity as employee, there is no supply. The matter is closed. But if it is a supply, check if it is RCA, whether there is exemption. If there is supply and there is no exemption, then only your case is taxable. Then you move forward to decide RCM forward. So this sequence I have told you in the first class also. Today also I repeated that first there should be a transaction. Then you have to check whether the transaction is supply. Then whether it is exempt. And when you cross all the barriers that yes, the transaction is supply, not exempt, then you should go to check RCM, FCM. don't directly come to RCM FC. If he is in the capacity as an employee, it will not be a supply in the first place. Why to check RCM FC? But if he is not in the capacity as an employee, independent, and as I said, your service contracts allows you to do that, then only it will be a supply, because in that case it is not Schedule 3. Then check if there is any exemption. There is no exemption. Then check RCM FC. And it will be FCM because that is not covered anywhere here. I hope now it is clear, Swaminathan.
Yes, sir. Very much clear. Thank you.
Perfect. And then there are two very simple services. Services of agency given by insurance agent to the insurance company, that is the company who's engaged in insurance business, or it is the, again, agency service given by a recovery agent to the banking company or the non-banking financial company for whom this agent is doing the recovery. So these are very simple RCM entries. Ma'am, you have to make some announcement. Should I stop over here? Ma'am, you're on mute.
Am I audible now?
Yes, ma'am. Good morning.
Good morning, everyone. Not an announcement. I'm here to conclude the session. So you may carry
Okay,
on till the time.
So I have covered for what I needed to cover. So if you want to conclude, you can conclude.
Okay. Thank you, sir. And I hope every student also was also aware that from today onwards, your timings for indirect tax laws final classes have been changed. It will be on Friday and Sunday morning, 7 a.m. to 10 a.m. So all of your friends and colleagues who are not aware of the same, please let it know. Please let the same known to them that classes will be held from Friday and Sunday, and in the morning itself, 7 a.m. to 10 a.m. Another thing very truly said, explained by sir, that first of all, you need to see whether a transaction is a supply or not. Then you have to check the whether the same is covered under any of the exemption list, exemption notification number 12 by 17 CTR dated 28/6/17. If it is not covered under exemption, then you have to check whether it will be taxable under forward charge and reverse charge. These steps are very crucial, and Sarah explained it very methodically. So now when you have checked that something is supply, it is not an exempt supply, then you will check whether it is taxable under forward charge or reverse charge. See, what happen is that we are aware, we memorize the list of services which are taxable under RCM. We remember, yes, it is legal services, recovery, whenever we see recovery, sponsorship, security, we understand it is taxable under RCM. But please, students, make it a note that along with the category of service, it is very important to memorize, to know who is the supplier and who is the recipient of service, to make it taxable under reverse charge. Just the category of service itself will not make it taxable under reverse charge, like sponsorship, security. It is important to know whether the supplier and the recipient, they fall under that notified category or not. Then only that particular supply will be taxable under reverse charge mechanism. So I hope I am clear at this point. And now the class will be on Sunday, 7 a.m. to 10 a.m. And before you join the session, I request all of you to go through the topic after the session is over. It will strengthen your concepts. And in case you feel there is any doubt, you may jot it down. And in the next class, you may ask to the sir. In that way, your doubts will get clarified at the same time. And you will be able to understand the topics in a better manner. Right? Thank you, students. Thank you, sir, for the wonderful session.
Thank you, ma'am.
Thank you, ma'am. Thank you, sir.
Thank you.
ma'am.
Thank you.
Thank you all. So again, same request, please join live, though you have the recordings available, but as you are seeing since past 3 sessions, since we are at the final class where the paper is mainly case study driven and more on the substantial part rather than the procedural part, it is very important that you are present live so that even your questions are addressed and whatever doubt crops up, because now we are going to look at the law from an expert level. So it is very important that we go to different aspects of a transaction. And that is, I'm sure that when you are attending live, it will make more effect in your minds, in your brains, and you'll be able to retain it much better. So humble request, though morning times may be slightly early for a few, but just it will also help you starting your morning early, which will later on help you at the time of your revision classes or your personal revision. So please make it a point that you will attend physically live as far as possible. So with this note, I think we can conclude. So thank you very much, students. Thank you, ma'am.
Thank
Ashok
you.
ji, thank you very
Thank
much.
you, Ashokji. Thank you, everyone.
Thank you, sir. Have a wonderful day.
My pleasure, beta. Thank you all. Thank you.
Thank you.
Yes, Ashok.